Voice loud enough? Okay, great. So welcome back. Welcome back. Not sure how many of you were here on last Wednesday, right? If you're here for the first time, that means you did not listen to me on last Wednesday, type a me. Yeah, type a me if this is the first time you listen to me. Okay, yeah, there will be a slight delay because I'm streaming it from Zoom to YouTube Live. So there's typically between 15 to potentially 20 seconds delay. So when I say something, I need to wait 15 seconds to see your response. But that's the best we can do right now with the technology, right? Yeah. Okay, good. So now I can start seeing. So welcome everyone. Just for everyone information, I conducted a live session on Wednesday. If you want to check out what I shared earlier, you can go to our YouTube channel, right? Just go to YouTube and type Election Beyond Insights, right? You will find my old post where I go through the right after the results was in Trump's favor on that day itself, on Wednesday, right? Before the market opened, I have already done the debrief so that people can prepare for the market reaction, because otherwise by today, right, it will be a bit late to go into some of the stocks. However, what I want to share today is on the post-market reaction debrief, right, for the last 2 days, and also to assess will some of these stocks have more upside. Okay, I'm sure some of you would want to know, if you are late, okay, can I still go in, or is it too short and is it going to be just a short-term rally and you should get out now? Yeah, or whether the FOMC update this morning is going to have a severe impact on the market direction. And today we have news from the China stimulus announcement update as well. Yeah, although it's not the full announcement, we get at least the part of the significant announcement on the 6 trillion yuan stimulus that I'd like to share with you. But before I proceed, I'd like to share this with you first. Today's topic is on the 3 area, right, which is on post-US election, on FOMC update, as well as on China stimulus impact to the market. But I also like to highlight, right, Beyond Insights and myself, we are an educator, right, education company, which teach people the subject of stock market investing and trading. We are not investment advisor, right? So whatever we share today is for education purposes. I will share my thought process of how I interpret the market, and it is not a buy and sell recommendation. Right, and today's session.
Are you sharing screen?
Oh, sorry. Yeah. Okay, so sorry about that. I thought I'm already sharing. Yeah, just want to share with everyone. Today's session is also held in conjunction with Moomoo, right? This is also being live feed to the Moomoo platform, where people can view the video concurrently, other than the YouTube live. Okay, so I'd like to thank our sponsor Moomoo for that as well. Yeah. So I want to highlight that Beyond Insights is not an investment advisor. We are educator in the subject of stock market investing and trading. We have the most complete education in the stock market and investing and trading, all the way from beginners, intermediate to advanced. And so what we share today, I want to make sure that before you do any investment or trading, right, you need to make sure that you understand the methodology, right? Not just whatever stocks I say today and you go and buy, right? That would be too risky, because you need to understand how to analyze the trend, how to evaluate whether this stock's valuation is still good, and where to enter, how much to buy, and where to put the stop loss. All right, so that is something that you must know how to do yourself before you enter any trade, right? So this is more sharing of my own personal perspective. And Moomoo Malaysia does not endorse or guarantee any of this completeness. They are just one of the sponsor for this event, right? To also channel to their community. All right. Okay. So now, before I go into the FOMC update, I'd like to ask a question, right, so that it's more interactive to you. Although I will be able to see your post only 15 seconds later, just bear that in mind in case you're wondering why there's no response from me. I also have a few of our team to actually monitor the chat and bring up a question to me in case I overlook that. Okay, so one of the interesting part about this year's election is initially people thought that it will be a tough fight between Kamala Harris as well as Donald Trump. However, Donald Trump had a very big sweep, right? So I do not want to repeat what I have covered on Wednesday, right? But I will cover the post update, a continuation of what I do there. So do watch that video if you are interested to know. Because of this clean sweep from Donald Trump, one of the most important thing that Donald Trump are able to get is to be able to push his policy forward. Okay, so let me show. I want this session to be very practical rather than going through. I have very few slides to show, but I want to go through the practical part, which is what I thought that you wanted as well, right? Yeah. So one of the significant impact that people ask me on the Wednesday is the US dollar performance, right? Can see that after the election over here, like 5th is the election, the US dollar pullback, and after that, the next day, it was very, very bullish, right? So what do you think is the reason why the dollar index go up, right? Those of you who still remember what I shared on Wednesday, can you share on the chat as well? See whether you remember. And for those of you who just joined us for the first time, right, and you're not so familiar with the dollar index is a index that measure the US dollar versus a basket of 6 currency, right? So that is not lopsided towards US dollar versus a single currency. So on that day, the US dollar went up. Like, why do you think the US dollar went up instead of down? Okay. Yeah. So one of the reasons is because people thought that with the tax cut that Donald Trump wanted to implement, right, and other incentives, it's going to cause inflation. And if the inflation is going to shoot up next year, let's say when he implement the tax cut, because that will also increase the consumer spending. When you reduce tax, means the company as well as individual have more money to spend, right? So it actually benefit corporate spending, which is a good thing, and it will benefit individual spending as well. That will activate the economy. So that's the reason why when Donald Trump win the election, usually is bullish for the economy without any other disaster happening, right? Yeah, so we need to put things in context so that we don't conclude anything in isolation, right? For example, in 2020, whoever is the president because of pandemic, right, the economy will still be bad, right? So in general, when Republican win, it's good for the economy because Republicans like to cut tax. They are more business friendly. And this time, there are two things that he wanted to do, right? One is to reduce the continue the corporate tax that was from previously, right? Before Donald Trump won the election in 2016, there was a tax. The tax rate was 35, and he reduced it to 21. And now he wants to reduce it more to 15 if the company has manufacturing in the US, right? So that's another level of tax. So the tax cut that was implemented in 2016 is supposed to expire next year, sometime next year. So with him winning the election, he wants to continue that, right? So instead of if Kamala win, then it's bad for the stock market, mainly because he will increase the tax. Okay, he will terminate that means he will not extend it. So that's good news for the stock market. However, there's some implication as well, right? So that's one of the reasons why the dollar index went up. And today, right, it's very critical for us to see, does the Federal Reserve Committee, right, because of Donald Trump win, did they change any of the message, right? So this is where I like to share with you on the Forex Factory is where we get a lot of the economic indicators, but let me simplify it first and just put US. Okay, so you can see the FOMC Fed funds rate here. This is announced at 3 a.m. this morning our time, which is 2 p.m. New York time. So the Fed decided to cut the interest rate by 0.25%. The way we look at it, for those of you who are not our students, right? So this is the previous interest rate, previous month. Yeah, the can be previous month or the prior update from FOMC is 5%. And the Fed funds rate has been reduced by 0.25. This is already expected because during the last Fed meeting, they already table out what is the target rate for the end of the year. Okay, so we already expected that there's likely going to be 2 cuts, one in November, 0.25%, another one in December. And this will also be depending on the CPI and also the unemployment rate and other economic indicators as well, right? So this is per expectation. But usually, this is not the main thing that moves the market if it's per expectation. There's one more thing that will move the market, which is this press conference after that, right? At 3:30 a.m. Of course, we are not advocating you to wake up at 3:30 a.m., right? So on the next day, like this morning, right, I've been watching the press conference. We want to look for a message on the forward-looking, right? After this cut, what does the Fed think? Okay. Usually in November, they would not do any forecast projection for the economy compared to the quarterly meetings, right? In the next meeting, which is in December, so the Fed will have a projection for the economy, right? So let me give you an example of what I mean by the projection. Let me share my screen first. I'll show you the this is the December meeting. So this is for September meeting. In December, they will have this kind of forecast, but not in November. Okay. So one of the important aspects is here. I won't have time to cover all this interpretation, but I just want to go through the main one. We have a course called Macro Insights where I teach people how to read this and interpret it, right? So this is the June meeting, right? In June, right, let's look at 2024. The Fed forecast that the end of the year interest rate will be 5.1. That means by end of 2024, the Fed anticipate the interest rate will that they will target is 5.1. Okay, so at that time the interest rate was 5.5. Okay, then but after that they have actually cut 0.5. There was a 0.5 cut in September, and when they cut 0.5 in September, they update the forecast for end of the year to 4.4. Right, so after from 5.5 before September, right, they have cut to 5, and they forecast end of the year to 4.4, sorry. So how many more cuts would that be, right, based on this, right? This is as of September, they already cut to 5.0, and they expect end of the year. So by right, there should be a roughly 0.6, right, 5.6. But usually the Fed don't cut 0.3, 0.3. They will cut like 0.25 or 0.5. So there'll be likely 2 more cuts. So, and since there's 2 more meetings, November and December, we expect 0.25, 0.25, right? That's how we anticipate whether there's a cut or how much is the cut. However, you need to understand that this is not set in stone. As you can see, during June, they forecast 5.1, and in September, they changed their mind, right? Yeah. So they will monitor the economic indicators to see whether they need to revise. This 4.4, right, is actually a median target. Like every of the FOMC member will vote what they think is going to be the rate. And this is the middle point, right? If you arrange them from the smallest to the biggest, the center point is here, right? But if you look at all their voting, right, the range of the people voting is 4.4 to 4.6. That's called the central tendency, like somewhere in the middle ground. So how much more do we think the Fed will cut after this, right? So we look at 2025 is 3.4. So that means the Fed, as of September, not right now, as of September, they think there will be another 1% cut. So roughly every quarter, 0.25%, right? So that will end up end of next year, 3.4. Okay, so you can see that they are having more easing policy right now compared to the June projection. And in another year, they will reduce it to 2.9. Okay, the longer term target, right? This is longer term, they're targeting 2.9. Means after that, you don't expect more cuts, okay? Yeah, unless there's some serious trouble in the economy. Right, so this is how we anticipate the interest rate direction. Why is this important? Okay, because interest rate affect borrowing costs, right? Affect cost of living, and this will affect industries like housing market. Yeah, the home builders industry, where the number of houses they are able to sell depend on whether people are comfortable with the interest rate direction. So for the last 1 year, people are holding back from buying houses, even though they need to buy, or the investors are waiting for the Fed conviction to cut. Okay, not just exactly how much they cut when, but are they convicted to cut further down the road? But the Fed usually give a language where they look at the data on a month-by-month basis, right? So they're not going to give you long-term projections. The only long-term projections you can see is here, but they will revise it on every quarter. Okay, yeah. So this is how we look at the projection. So with this, the good news is the Fed is still on the easing policy, and they have not changed their language today, right? As of this morning, based on the press conference, they feel that the inflation is still on track to go down, right? So this message is very important, right? If they think that the inflation is on track to go down, means unlikely they will keep the interest rate flat, right? More likely they will continue the anticipated plan, right? The original plan to cut the interest rate by another 0.25. But if they think that it's still shaky, but the language is very important, then they may have a pause sometimes. Yeah. So based on the language today, very high chance they will still cut 0.25, unless the employment becomes super good, the wage go up, right? Inflation shoot up again big time, right? Which is less likely to happen, although not impossible. Okay. Yeah. So I would say that very high chance they will cut 0.25. But after that, they may take a pause, right? Because based on the projection, next year is total 1%. They can take a pause in January and look at the economic indicator first, then only reduce in March. Okay. And March, we can see the next economic projections. So this direction, is it good or bad for the market? What do you think? I'd like to hear from you first before I debrief. Yeah. The FOMC announcement affect the whole world, not just the US, because it impact exchange rate. Okay. If people are interpreting that the Fed will cut faster, then the US dollar will weaken faster. If the Fed doesn't want to cut faster than normal, then the dollar will be either neutral, that means flat, or improving. Okay. Yeah. So based on this, it's already factored in. So one very important thing that you need to understand is the stock price that you see right now is an anticipation of the future. Whatever is known usually is already factored in. Okay, so it's only new news. And the stock price is the stock market reacts 6 to 9 months ahead of the economy. All right, so we are looking at what is Fed interest rate direction to see whether next year the market will recover. So based on this, it can gradually recover, right? Because the employment is also getting better. So if you look at the unemployment rate, originally the forecast was 4, right? June projection was 4, but after that, they revised up the unemployment. So that means the Fed thinks the unemployment is supposed to be higher end of the year, but right now it's 4.1. So the unemployment is actually better than what the Fed think right now. Okay, so when it's better, so good or bad? By right, it's good for the economy, right? But that also means that the Fed don't have an urgency to cut interest rate. Earlier, people were thinking that they may cut faster because the unemployment rate may be higher, like this 4.4. But now unemployment is only 4.1. Okay, there's no real urgency to actually cut. Yeah, but the Fed still think that at the current interest rate, which is now 4.75, it's still considered tight, right? So that language is important, which means they still think that they need to cut further, okay, so that they can activate the economy. There was also a question that was asked, does the election result change the perspective? And he says no, right? At least for now, he don't see anything that they need to do to tailor to the election. So they will still look at what happened to the inflation next year. So based on Donald Trump's term in the last round, inflation did shoot up, right, when he cut tax, but it's only about 0.3, right? So it's not that significant. So right now we do have some room for inflation to shoot up a little bit because it's already below 3%, right? It won't be so alarming compared to the 9% inflation rate earlier, right? So I think we are okay in terms of not expecting a high shoot up of inflation. Why this assessment is very important? Because if we anticipate just because of Trump tax cut, the inflation will shoot up again, means the Fed may tighten again, or at least stay flat. And that will not be good for the overall stock market, yeah, because the spending power will be less, yeah, because the disposable income for a lot of people, depending on the how much they pay for their home loan as well as their rental, okay, as well as their car loan. Okay, so I hope this helped you, okay, to understand this part. So this is the first part of the update. We'll look at the December part. Probably by the time we can do another update. Yeah, so you can see here for the next meeting is going to be 17 and 18 December, and the outcome is going to be released on the 18th, usually 18 on the afternoon. Yeah. Okay, so now let's look at the next update fresh from the hour and today. So China, as I mentioned on Wednesday, right? China has a very important meeting. They call it the NPC meeting, where they will be meeting for 4 to 8 November, like the meeting end today. And this meeting is very important, and they coincide with the US election. They probably don't expect that Donald Trump win by such a big percentage. So they may have to relook at the stimulus that they wanted to implement, right? So at that time, why this is important? Because Q3 GDP for China is 4.6%, but the China government want to target 5%. And it's going to be tough for them to reach 5%. So they are looking at what they can do. They still want to achieve 5% based on their last language. They still want to achieve 5%. That's why you see all these stimulus coming in. However, I want to caution everyone, don't buy China stock just because, or move a lot of funds to China. I think, oh, China stimulus, so move from US to China, right? That's not the right way to, that's not the right thought process, right? First, you need to understand, is this stimulus going to solve China issues, and what's the time frame it's going to solve, right? Some implementation of stimulus may take a long time to take effect in the economy, right? So the fundamentals will not change so fast, right? But stimulus itself can cause a hype in terms of more people getting into the stock market. So the lesson learned is very important from the this last stimulus, right? Let me show you the Shanghai Composite Index, right? Due to the last announcement of stimulus after a long time, right? We don't have a major stimulus from China, and the earlier stimulus was very minor. There was quite a number of stimulus, but it was very minor effect. So during the last round, when they implement a big stimulus, it was a big hype. After that, it came down, right? Just imagine if you're chasing after it here or chasing after it here, yeah, you may have a big loss for that, right? And now we have another uptrend here. And if what they announced disappoint again, why does it drop here? Because after the announcement, there was not much details on the implementation, okay, or the time frame. And so people were worried whether that's going to be effective. So the speculator just sell offers. And now with the anticipation of like these few days, you can see that the market moved in anticipation of the news, but it correct based on the news. Okay, so before, even though Donald Trump win, by right, it's good or bad for China? Donald Trump win, just type on the chat. Yeah, so by right is bad because you want to impose a lot of tariff on China, up to 60%. So by right is bad. But why is Shanghai stock market going up? Why is Hang Seng Index going up? Right? Because people anticipate the stimulus. So even though Trump win, the pullback people used to buy. Okay, but what if the announcement disappoint? Then it will come down again. Understand? So you need to make sure that you don't get into the hype without understanding how this works. And let me show you the intraday chart today. Right, the announcement came in the afternoon, and the Shanghai Composite Index actually came down. Right, same for Hang Seng Index. Yeah. So let me show you the actual announcement here. China to unveil the stimulus plan on Friday may hold fire until early 2025. Yeah, analyst says. Okay, so this is the details. So let me share with you what has been announced so far. Okay, before I go into the Trump stocks, so I will skip this one first. Yeah, so this is some of the update on what the analyst commentary on the China market is thinking. So China need to tackle a very big hidden local government debt, right, with a prolonged approach. So there's a huge property bubble, right, during the in the last few years already, right? So there were some property companies that go bankrupt. So the government need to step in to ease the debt burden of those, especially in the property area, right? So some of these are very technical. I don't intend to go to this technical explanation today because there will be quite a number of beginners. So they are implementing a bond swap to reduce the interest rate payments, right? So is it a bond? You can treat bond as a borrowing. Okay, so sometimes when you cannot repay back your bond, right, you just issue a new bond and borrow more. And if the government is willing to lend you at a cheaper rate, right, that can help ease your debt burden. Like that's a layman version of it. And the China government initially was watching their debt limit, and they want to control the debt limit, and now they're willing to increase the debt limit, right? So that there's more money that's being, more loans to help the whole economy to recover. Okay, so this can boost the confidence because they do need significant amount of money into the market, right? Small amount will not help so much. So earlier, all the stimulus, the amount was too little, and this time it's going to be 6 trillion yuan. Is this huge or small? What do you think? 6 trillion yuan. If I contrast to the US financial crisis, when I was trading way back I started trading in 1993. So I've seen the Asian financial crisis, I've seen the dot-com crash and the US financial crisis. During US financial crisis, the US government actually have a 700 billion stimulus, right, to help recover. During the pandemic, it was about $9 trillion, $9 trillion US. And combine all the central bank is 26 trillion, right? So this China stimulus is about 6 trillion for what they call it. I would say they are in the quite a deep crisis in terms of the consumer spending and the housing market. Okay, so but what is mentioned here is they can still do more. They just want to be doing it on staggered basis. So right now, the government are willing to allocate 10 trillion yuan over 5 years period to directly address the hidden debt, and they will have no tolerance of new debt. Previously, there's a lot of hidden debt, right? Because of a lot of the projects, right, of the property projects are done at the individual state level, right? So not all the state actually disclose the amount of debt. Okay, so now the government say there will be zero tolerance on any hidden debt. They have to expose also, at least the central government know how big is the issues. Okay, so this announcement is in line with the market expectation. So why earlier there was a big jump? Because people don't expect it, right? So now people already expect it. You will not see such a big reaction, right? So when there's a surprise, unexpected, then there's a big jump. Now people are more worried, okay, because they got disappointed. They were expecting more, then they get disappointed. So one very important lesson I learned is market work based on expectation. So it's not whether the actual is good or bad, but if they expect more than usual and you don't deliver to that, then the market will correct by itself. It's better to trade even before the actual news happen. It's called pre-earnings rally or pre-announcement. So in anticipation of the announcement, you trade it up. It's better to take a take a bet on what is the outcome going to be. Yeah, unless there are certain things that has more predictable, then only you do that. Just look at the US election. Before that, a lot of the polls based on survey actually quite a tough fight. It's like 50-50. Other than there's this poly market, which is a betting site, which is more gearing towards Trump. So things can change, right? In many years of a US election, the polls are not that accurate, okay? So you cannot just base on the polls and trade either way, yeah? Okay, so then the next update is the government stance. Despite the debt, China maintains that it still has ample tools to manage its finance and emphasize that the low debt ratio, they have a low debt compared to many other economies. What does it mean here is they still have more room to implement more stimulus, like just that they don't want to implement all one shot. And more fiscal support is expected next year, including enlarged deficit, increased special bond quota. Right? And you can see bond quota is they can increase the borrowing and issuance of ultra long treasury bond. This is ultra long treasury bond is like very long-term borrowing, like 20 years, 30 years bond, yeah, and beyond, yeah. Then the A-shares have shown volatility. A-shares are those stocks listed in the China stock market, not those in the Hang Seng Hong Kong stock market. And in the international context, the recent US election could necessitate a larger stimulus because Trump winning is actually bad for China, right? Because he will use a high tariff to bargain with China. But knowing Trump, because I've gone through Trump election in the last round, I've seen through it, all the policies that it implemented and also all the tariff uncertainty. The actual outcome wasn't that bad. Okay, wasn't that bad compared to during that time it was bad because it was unexpected. So over the years, what I learned is this, right? When market don't expect it, it will become volatile until a point where the market digests the information, they can make sense of it, assess the impact, then the market will stabilize. So you can see that this round, even though there's a shock, right, you don't see a big volatility. In fact, the S&P 500 volatility actually came down instead of up right after the election. So people don't see it as a going to be a big market disaster just because there's a change of what people may expect. Okay, so because Trump has run the previous term before, a lot of things are more. You can check back what happened last time. Okay, it's more predictable this time compared to last time, and I will walk you through some of the impact. Okay, all right. So let me So I need our team to let me know in case I miss out any question here. Right. So the most important thing, just to summarize, for the market is very sensitive to US dollar direction. So right now, the good news is yesterday, the US dollar pulled back a bit after the FOMC meeting. So you can see the FOMC meeting is at our time 3 a.m. Right. So you can see the volatility during that time. Right. So this is the announcement on the rate cut, 0.25%. After that, the 3:30, they have the press conference. So by 4:30, the meeting ended. So it's very important to look at the reaction after that. Yeah, after the press conference, people will digest. And from my past experience, it may take 2 to 3 days to stabilize. Right. So don't assume that the direction today, oh, people look at it as good, then you buy. And it could be profit taking the next day, right? It can take 2 to 3 days to stabilize post FOMC, right? Because there's a lot of big funds in the world. They will not take a conclusive decision so fast, especially when there are 3 things to handle right now: post-Trump election, FOMC, and they have to digest what's happening in China. What is the stimulus plan from China? So they will take some time. So next week will be a better gauge of the conviction, right? Which direction it will go. So how do we position ourselves? Right. My thought process is always, we are not here to gamble, right? We are here to take a trade on what we see as a higher probability, more predictability rather than gamble. Okay. So that's very, very important. Now, we don't play the market, we trade the market. Okay. Yeah. Or we invest in the market. So what do you think higher certainty has a more prolonged move? Right? Can you type on the chat first before I share my perspective? Right. Based on whatever I have debriefed earlier, right? What are the industry that will be in favor, right? Look, let me show you an interesting tool from Moomoo, right? So this is Moomoo platform. You can use the mobile app as well, right? So I show you there's this feature here. I won't have time to cover all the Moomoo feature, but I just want to show you this. If you have the desktop platform for Moomoo, there's a Moomoo feed here. If you use the mobile, it's under feed. Yeah. So click on this, then there's a feed here. Yeah, can you see the feed here? Okay. So there are a lot of feed here where I find it pretty useful, and they are very, very fast in coming out with the commentary. So there are many people you can follow here, but it will get you very distracted. So you need to make sure that you have a stance on your own personal strategy first. So these are the one that I follow. Okay, the one that I follow. The one that I highly recommend is the Moomoo Research. Okay, they are very fast in terms of coming up with some of the outcome of earnings and so on, or even election. So if you click on Moomoo Research, okay, right over here, you can see that during the election, they came up with this list. This is the day after the election, so applaud them for being very fast on this. Since I have debriefed my perspective on the stocks that I shared earlier, so today I'm going to share what is in Moomoo's list instead of what is in my list. Yeah. Okay. So this is the one shared by Moomoo. That what are the potential stocks that may benefit from Trump win? So I always use the word may. So anything can happen in the market, right? Because there's a mixed reaction right now to even China stimulus and the FOMC. So before you trade any of these stocks, you have to make sure that you understand whether you are a long-term investor or short-term trader. Are you trading this long-term or short-term? It will be very different in terms of how you analyze these stocks. Okay, so some people, they just want that quick win post-election for a few days, then they sell. Okay, then some of the stocks that are listed here is fine. But if you want to buy this for long term, then you need to understand and analyze this properly, because some of these are emerging stock, but it is still a good reference, right? I'm a strong believer of building a strong foundation. So let's look at this list. And I'll explain the rationale. The left-hand side is Trump-linked company, right? So this is a Donald Trump media. Remember, he was banned from Facebook for a while. Okay, so he doesn't like Meta. So immediately after he won the election, Meta stock came down first. But as I mentioned on Wednesday, Meta is still a good long-term stock, right? It's profitable. So you just have to wait for a good support to get back in. And later on, I will show you where Meta is. Yeah. So, but he set up his own company called DJT, right? So this is the one I want to warn you about. Yeah, so let me show you how to analyze this briefly. Yeah, this is not a full-blown course, but I want to show you briefly on the DJT. This is definitely not a good long-term stocks. Right? If you look at I have a paid account, so you can see this. EPS, every year is losing more and more money. Okay, so what do you think? Do you want to invest in this stock? No sales yet. Okay, zero sales, more investment. And at least the share outstanding is not increasing. So it's staying flat. So this company is not profitable yet. And that's the reason why you see the stock chart reaction after a climb, it actually fell back. So people sell on the good news. Understand? Just because Trump win doesn't mean all Donald Trump stock will be going up. Yeah, so this is a very important lessons that all of you need to learn, right? Before, you can see on the 29th October, before that, when he was winning more in the survey, right? The pre-election polls, the stock actually went up, right? Earlier, Kamala was leading, right? So it came down. So after that, it actually moved up. So that's how the stock market behave for speculative stocks. And nearing to the action, people sell first, like just in case, because they don't, just in case he lose, then people will sell off first. So you know, understand the psychology for speculative stock is like that. These are not strong fundamental stocks. So after the sell off, when he won on this day, can you see it gap up here? Now let me show you on the right hand side. Oops, sorry. Okay, so let's look at this. This is the 5th, yeah. Okay, so it's November 5th. So we'll see the result on the next day, right? So you can see the market close here on the November 5th. Market open the next day. Okay, so this is our Friday night. Okay, sorry, over here. Yeah. So you can see it actually gap up first, then people take profit and it continue to come down. People take advantage of the gap up over here to sell off. And also the earnings is also, okay, so the earnings result is not shown here. Usually when you click on this, there will be earnings result. So based on this, you could be affected by the earnings as well. Right, but I will not, would you invest in a stock like this? Type on the chat instead of me telling you. Yeah, this is not a buy or sell recommendation. I'm also not recommending you to short this, right? Unless you just do intraday trading. Right, just type on the chat. Do you think this is a good stock? Okay. Yeah, this is a speculative type of stock. Right? So same for some of these stock here, like PHUN and RUM. Yeah, so let me show you here. PHUN. Right, let's look at this. Do you think this stock is good? Right, the sales has been going down for the last 5 years, and the earnings per share still negative. And the worst thing is the share are diluted, right? Every year they are increasing the number of shares. Means your earnings, right, has to be shared with more and more number of shares. It's called diluting your earnings per share, right? So in these 3 perspectives, it's good or bad. Yeah, just type on the chat. Thanks. Yeah. So let's look at the market reaction to this, right? Yeah. Let me type the PHUN. Okay, let's look at the election day. It actually gap up just a little bit because this stock is not a great company. All right. So first you need to know who you are. Like we don't have to trade anything under the sun or the hottest stock of the day. So you need to have a position on who you are as an investor or trader. So in our course, we actually help students to understand who they are, right? So whether they are long-term investor, mid-term trend trader, that means they ride the trend. When the trend reverse, they just get out. And swing trader, you just take advantage of the range bound, or you're intraday trader, right? You don't care what happened tomorrow. I just take, let's say post-election, which stock will rally even more, like I trade up. After that, I close shop, right, after 2 hours. Or which stock will be having a disadvantage. Example, on that day, First Solar was the one that is impacted, right? Like here, it gapped down, right? As I warned on that day, right? Don't just short a stock because it's not in favor, because it's coming to a strong support already. Right, as you can see here, it actually went back up. Okay, so yeah, so but on that day itself, you could have shorted if you see the pattern. Right, so you need to know what is your perspective first. So I'd like you to type on the chat, how many of you are investor, right? You look long term. How many of you are trend trader? That means you trade in months, a few months, you will get out, you ride the trend. Then how many of you are shorter term? That means you trade the swing in 1 to 2 weeks and you get out. Okay, this is like you trade the post-election swing or pre-election swing. And how many of you are the intraday? Like you buy and sell within 1-2 hours or within the same night and you close shop, right? Type on the chat. Okay, so I know which are the one I need to debrief more. So I hope that you understand for now, right? These are not the strong fundamental. But why is it listed here? Because they are trembling, right? So it makes sense that they will have some favor pre-election rally. But to hold for long term, this is not the one. Yeah, you can trade this intraday. The next one, much clearer conviction is actually finance stock, right? So if you look at Trump policy, and this is also proven from the last round, because he wants to deregulate the finance sector. Okay, and deregulation helped the finance sector to be less restrictive in terms of what they can do. For example, in the cryptocurrency world as well, right? So there's two parts to finance. One is the bank, and these are investment bank. This is the other part, crypto mining. Okay, it gives more room for them to go into, like, for example, a lot of banks may want to go into the investment banking arm, and their funds, they want to be able to open up to have cryptocurrency investment, right? If the policy is too restrictive, then they cannot do that. And this will reduce the ability to make more money. But I like to caution on this, right? Because if it's too loose, it can cause a crisis like the US financial crisis. During US financial crisis in late 2007, it was because there was too loose restriction on the financial sector, right? So a lot of the banks are taking too much gearing. I mean, they're having too much gearing, taking too much risk, and then there's a big crisis that happened, right? So we don't want to see that happening. So in order to pass through the deregulation, it may need to go through quite some debate. So it may not be able to be pass through so easily. But the normal deregulation, I think, will be able to pass through since he have a majority on the Senate as well as a majority on the Congress as well, right? So these are clear winner. And if you look at the, so among this, you also not want to see how do you choose. The easiest one, right, is if you want to diversify, right, you go for XLF. This is the finance ETF, okay, finance ETF ticker. And if I show you over here, right, if you go to XLF, okay, now so you can see it actually has quite a lot of the stocks that was listed earlier. Right, first of all is it has a Warren Buffett company, right, Berkshire Hathaway, JP Morgan, right, Visa, Master, Bank of America, Wells Fargo, Goldman Sachs, Amex, right, Morgan Stanley. So you don't have to buy individual stock, but you need to recognize when you buy an ETF, you need to look at composition, right? This is very heavily loaded to Warren Buffett, right? So if you're aligned with, his investment style, then it's okay, yeah. And whether his investment is in favor, right, then Donald Trump win. Yeah. So, and it's quite geared to JP Morgan. JP Morgan is also a great company, right? Visa and Master. Do you think it will have a benefit to Visa and Master if Donald Trump win? And in what sense? Before I share with you my perspective, in what sense it will Master and Visa will benefit or is negative, yeah, for Master and Visa? Do you think consumer spending will go up or go down? Right, Master and Visa is related to consumer spending. So if there's an easing policy, like cutting rates, which the Fed is doing, right, then it will help Master and Visa. On top of that, because so by right, without Donald Trump winning, right, Master and Visa is still recovering already. Because of the Fed intention to cut rates, and if consumer spending recover, right, and also travel has recovered very fast. So what is majority of your spending in Master and Visa? Right, majority of the big ticket item are on travel, right? Hotels, air tickets, yeah. So as long as people are traveling, then more people will be charging to this card and they can make more money. Then on top of that, the Donald Trump policy are in favor of finance stocks, okay? So one thing you need to understand for finance sector is, for Master and Visa especially, when interest rate is high, they have an advantage. They make more money for the delay payment. Some people, they don't pay full. and they charge them an interest. The higher the interest, the more they make. Okay, so when the interest rate is reduced, they have a disadvantage of that, but that could be balanced by the increased spending, right? So the increased spending is still what they are looking for. Okay, so based on this, one choice is you invest as an XLF. So the next question is, how long will this upside last, right, for the finance ETF? So you also need to be cautious not to chase the market because it has gapped up so much, right? So sometimes people may think, oh, buy over here, maybe it continues to run. When the stock has gapped up so much, you need to let it settle down, right? Usually I advise our students, after an earnings announcement, right, wait for at least 5 days to let the stock settle down, right? In the meantime, you can use intraday to trade it first, right, until it settle down. There are some exceptions where you need more experience to assess that, oh, this is a great opportunity, or the stock is penalized too much post earnings and it's a great entry to at least stagger buy, right? Those require more experience. But in general, you need to let it settle down, right? Can see the profit taking here. So I do not want to give a particular entry exit rules here, right? So we do have a course if you're interested on that. But what I share with you here, you can take a hint on potential area that is safer. But a lot of times, right, these are the call resistant broken can become support, or this is the EMA 20. However, based on the sentiment, what do you think? Do you think it will come all the way back to here? Which I don't think so, right? So it may settle down on a new support, but you need to give it time. More importantly is, as I mentioned to you, are you investor or trend trader or swing trader, right? So if you're intraday trader, you don't care, right? You can just trade for the day. Yesterday you see correction, right? So you can trade down. But I wouldn't like to trade down in an intraday for a stock that is in favor. I'd rather choose a stock to short when it's out of favor, or I see anyone still have continuation of trend, right? That's just my standard. There are times I trade counter trend only when I see it's already peaked. Okay, so now you need to let it settle down if you're investor. More importantly is to go back to check in the past, right? So let me share what I meant here. In order to know how long the finance stock can continue to go up, you can go back to the history when Donald Trump win election. Okay, use data to prove it. Let me go back to end of 2016. Okay, take a while to refresh today. Not sure why. Oh yeah, because I don't use this sticker to refresh earlier. Yeah, so let it refresh for a while. Okay, so now it comes down. Yeah, can you see this COVID-19? Yeah, okay, so this is the area, right? Look at 2016. This is 2016, right? Yeah, this is when Trump won the election. Can you see a big spike on finance stock here? Yeah, over here. Yeah, so there was a jump all the way until, let's look at the date, 8th of December, right? So now, after a big spike here, you can see that usually it will settle down a bit. Yeah, and why finance stock did not continue to rally, there's a reason for that. Because they're waiting for FOMC outcome, right? Finance stock are also very sensitive to rates, but since it's per expectation, just my perspective, right? A pullback, right? Given that we know there's going to have a longer term upside impact that is in favor, right? A pullback to a strong support, right, or a higher low, right, could be an opportunity to get into finance stock. But you need to understand trading first. If you otherwise you will not know the precision. We have a way to know how to know it's a high low, where to put a stop loss, and how many units to buy. So just based on this, it rally for up to a month, then it start to settle down. Any stock that move up too much, like in this case, right, from here to here, right, is 18% in 1 month. 18% in 1 month. Sometimes some stock take 1 year to do, like S&P 500, right? Roughly 11% to 12% per annum. In good year, it's probably 20%. And this one is in 1 month, right? That's why if you understand all this correlation, you can make money in the big trend, right? Shorter term. But after such a surge, right, people will consider, oh, is it too stretched, right? Then the consolidation will happen. This is called consolidation, right? So not enough people sell, but not enough people buy. So it go yo until there's a new catalyst that can move it again, either through earnings announcement, go into the next earnings season again, right? The bank already announced earnings this round, so it's not affected by earnings already. So after consolidation, there's need to be another trigger, okay, to move it up again, right? Then this is the typical post-February profit-taking time. Yeah, normally the stock market rally from October all the way until January and sometimes early February. Okay, that's the typical, we call it Santa Claus rally. Then people will take a break. Okay, then April it rally again. That's the typical seasonal pattern. So doesn't mean that it will be a straight line going up. But what you need to recognize, what I'd like to share here is how long it rallied during Trump tax cut over here, from here all the way to the peak, right? The finance ETF, just the ETF alone went up about 51%. Okay, so after that, it came down because Donald Trump started to get itchy, right? He started to do all this, he started to impose all this tariff on China starting January, right? So it become very volatile, yeah, for the stock. So look at it, like based on the past, there's still a lot of room to rally. But I'm a person who deal with both macro industry as well as stock fundamental. So if you're looking at the longer term trade, if you are a trend trader or investor, you need to look at each of these company, whether it's fundamentally sound, right? So rather than it's still losing money. So one is the fundamental side. The next one is based on the trend here, right? In the past, what do you think, right? Is there more upside to finance? Yeah, type on the chat. And what would support the upside is what I like to share, right? What would support the upside? The most important thing is deregulation is not so easily quantifiable, right? How much do you deregulate? And it still takes time to go through all the Senate and the Congress, right? Not so easy to quantify how much impact it is, but it's something that is very easy to calculate. What do you think it is? Very easy to see the impact straight away, right? Is tax cut, right? So let's look at whether the valuation is good right now. If I look at any stocks right now, let's say JP Morgan, right? Like, how do you evaluate whether the, you can see here, I don't like, I mean, in general, just to let you know, my student will know, I don't like bank stock, like US bank stock, Malaysia is different. They are not very profitable compared to tech stock. I prefer tech stock, right? They make more money. Like, so you can see the return on equity is only 16, but for the last year and this year, they start to make more money, right? Due to higher interest rate. When you have a higher interest rate, they make more money. When the stock market is good, investment banker makes more money. But in the past 3 years, this was pandemic time, they don't make so much, right? So look at the growth rate for the bank is only 2.57, like for the next 5 years. So it's a very slow growth. Okay. However, they are still making money, right? So the PE ratio, PE is a way to measure whether it's expensive or cheap, right? So it's actually very low, right? So 13.2 is considered low, but too low is no good. Too low means people doesn't look good at it. Okay. But now with the tax cut, right, then there's a chance. So tax cut means, let's say this is price. Let me just show you an example here, right? Price. Okay. The PE, right? This PE. Let's say if this is very high, imagine you see it 60, okay? During the last Donald Trump tax cut time, early 2017, I still remember many of the stocks in our main watch list, right? They are very high growth stocks. The PE is about 40. So in conventional standard, people consider expensive, but the stock still continue to go up, the QQQ, the tech stock. Why can it still continue to support the upside? Is because, right, PE is price over earnings per share. So when you have a tax cut, what happened? When you have a tax cut, will the EPS go up or go down? Right? Tax cut means your tax is lesser, so you have a higher net profit. This will go up. When this go up means this will come down. So the PE will drop. However, this will only be impacted in the financial statement after 1 year, right? The year-end closing, right? So now let's say we are here. The tax cut is implemented in the next cycle, next financial cycle, and it's only shown at end of the year. Let's say the whole year accounts, then only the net earnings will go up. Then you see the EPS go up, right? So it will be too late. So people buy an anticipation the earnings will be improved even before it's announced. And that's the reason the stock was so bullish in 2020 2017, despite at that time you may see the PE being very high. But right now, what you're seeing here is the finance stock begin with not a very high valuation. So that also give it more room to go up. However, you just need to understand that currently the growth rate as of here is not very high, yeah, for finance stock. So you need to check the individual stock. I'm just giving you some of the guidelines. We look at 10 criteria when we evaluate whether a stock is good for long-term investment. Okay, 10 fundamental number criteria and also the subjective criteria. Okay, so this just gives you some guideline. If you're not comfortable, overall, what I meant is based on the last term for the tax cut, right? There's more room for the stocks to go up. So when you see a pullback and also the stock valuation is not high, then the conventional energy is not a sector that I like. Okay, yeah. So one of the reasons is you will see later on, right? It's more cyclical. So if you look at ExxonMobil has been sideways for a while, and let's look at the fundamental, right? The earnings is up and down, sales also up and down. So if you are trading it, to me, that's fine. Right? It's not a good long-term investment to me. Right? So remember, this is an election trade. This is not a recommendation for long-term investment. So sometimes just because it's in favor. And Trump wanted to support more oil drilling, right? Expansion of the oil field and so on. And this, a lot of the valuation in this area is low. So my perspective is too low is actually not good, means not in favor, right? Great companies normally command a higher P. We just don't want to buy when it's extremely high, right? So you can see that it did gap up, but it's neutral here. Okay, because of the EV demand, right? So I mean the EV deployment, so less people are, there are less demand for oil in the future. However, even though there's a drop in demand for oil, there's also less companies wanted to do oil drilling, right? Less supply will come in as well in the long run. So we have to look at the whole supply and demand. So one thing I don't like about commodity stocks is you have to monitor the supply demand. You need to see, oh, are there more oil fields coming up down the road? And how's the overall demand dropping? We expect longer term demand to drop. At least for the meantime, it's going to be lower because China economy is still not in good shape, right? If China economy recover, then you will start to see, at least from the airplane perspective, even though China has a lot of EV car, they don't need so much petrol from all the plane flying that will increase the demand. But it is not something to me that is very bullish, right, for the oil and gas. So you just need to know these are temporary upside, yeah, temporary upside. And oil price being one thing I don't like about oil and gas is also because the OPEC have a say on dictating the oil price range, right? So you need to monitor what the OPEC say as well. Yeah. Example, right? Oil price goes in the range, right? These are the range 67 to typically in this range, right? Up and down, up and down. It seldom go out of the range because when it go out of the range, it causes high inflation. Then the Fed will step in and control it, so it end up in the range. So if you're oil and gas company, do you make a lot of money? Right, if the oil price is in this range, right, unless the demand is a lot, right? Yeah, so you need to understand that these are more short-term trades, yeah, more short-term trades. To me, right, you can have a different perspective, right? Do share your perspective. Maybe I missed something, right? Yeah. So if you look at the chart in the short term, it can move, then it's fine. You have to always watch out on the OPEC. Okay? Yeah. Then the next one is UNH and HUM also to me is not going to be a long term because Trump wanted to reduce scrap price, like same for Kamala Harris, but there's only selected healthcare will be benefiting. Okay, so and to me is until he detail out the policy, then this could be quite short term, although you know that long term health, there's still a demand for healthcare, right? So I would say that if you want to trade UNH and HUM, you need to evaluate the fundamental of the stock first. Yeah, I don't have time to go through so many stocks. It's already 9 p.m. So let me just cover some of the more straightforward ones. Like I mentioned, finance overall, because of the valuation is low, because of the tax cut, and based on the last election, you know there's more upside, right? These are the one that's more likely to have more room to go up. Then the other one is the crypto mining. Just pick one of the stock to share with you if you want to go into this. These are the stocks that are affected by, because Trump is in favor of crypto, right? Yeah. So you can see the Bitcoin, right, break all-time high. Okay, you need to understand that this also, I mean, Bitcoin has its own uniqueness in terms of the limited supply. So you don't go in right at the stretch level here, right? You don't have a margin of safety, right? You need to have a strategy on how you stagger buy in the Bitcoin, right? The big surge is already there. Okay, so you need to wait for some bad news pullback, then only you can go in. So trading Bitcoin is one. The other one is the Bitcoin mining companies, right? And also the Bitcoin trading, the exchange, right? Crypto exchange. So these are those related to the exchange. Again, I would prefer you to look at the fundamentals. This one has a surge. I would trade it technically, okay, because it's hard to evaluate the let's say you trade Bitcoin, right? You cannot have a fundamental analysis, okay? But if you trade Coinbase, the crypto exchange, you can look at the fundamentals. Like Coinbase, look at this, right? Still not making money, right? Still recognize. Don't simply buy a stock like that. Yeah, the stock list that Moomoo provide is to trigger you, but you need to look at the fundamentals, right? To tell you, okay, this logically have a benefit because Trump is in favor of crypto, but you need to go through the process, right? Knowing that in 2021, the sales went up a lot, but after that it's flat. And the share are diluted. Look at the share outstanding is going up, and it's just make a little money right now. So in order for Coinbase, which is a stock, is the crypto exchange, they are competing with many, right? Are they one crypto exchange or many crypto exchange? Is it very competitive, right? In order for them to make more money, they have to attract more people to trade on the platform. Okay, and they are not the most attractive one, but they have benefit for US trader. US is more regulated. Right? Americans cannot just simply trade any other platform. Whereas people outside of America, they have more choices. Okay, so that's the benefit of Coinbase in the US, right? So the valuation wise is quite high. What I don't like is next year earnings per share is supposed to go down. Okay, so which is not so good. And this one you have to dig into their report to see anything else that we could have missed that still can provide upside. So for the meantime, it will be more technical trading. So there are so many ways to trade. I personally like to go into the stock that are stronger conviction, like clearer. The fundamental wise still have a lot of room to go up and align with the mega trend. Yeah. So finance, there's a lot of fintech. The fintech is aligned with the mega trend, right? So there's a mega trend story over there. Okay. So I cannot go through all. So all these are also. Let me show you the Mara first. Is it okay if we extend a little bit? I'm okay to go until 9:15 to max 9:30 if you're okay. Yeah. Okay, so now let's look at the Mara. Right, Mara is one of the better crypto mining company among the emerging stocks. Yeah, because the sales has surged a lot. Right, so I like to look at the sales has surged a lot. Look at the EPS and sales year on year, right? And it's already turned positive, although it's 1 year. Okay, so you need to make sure that it's consistent. What I don't like to see is falling negative again next year, right? Yeah, so this one require more study, and you need to watch out that crypto mining company, they have to add a lot more investment very regularly, right? Because it's a heavy investment to start a data center, okay, and all the infrastructure related to the data center. So you can see all these companies, they have to keep adding capital to be able to continue the investment. So it's not very profitable yet. So you are taking risks. You need to invest in this with understanding that these are emerging stocks. If you look at the stock chart, it's like this. Okay, so if you are trading the speculative based on intraday, then that's fine. Or if you are using options to trade it, right, with limited overnight risk, then it's fine. Okay, so many of the stock here are in that category, right? The clearer one, all these Mara, Riot, and CLSK are quite same category. MSTR is different, right? So MicroStrategy is a company that buy a lot of Bitcoin. So if Bitcoin go up, the valuation go up. So the more straightforward upside. So you need to understand it correlated very highly with Bitcoin, Coinbase crypto exchange. Some of this I won't have time to cover so much. These are LLY and MRK pharmaceutical company and biotech as well. So you cannot look at it standalone because of Trump, because recently they have earnings, right? LLY has an earnings announcement. And this company has been very, very bullish because of one of their drugs, yeah, diabetes drug that is in favor. Look at this, the sales has been going up, yeah, especially the last 1 year due to the new drug. Okay, And the next 5 years growth is 33.8, right? Because once you have a new drug, you monopolize for 20 years. Yeah, 20 years. And there's only one other competitor called Novartis, but the valuation is very high. Okay, so if they cannot, if any time when the sales slow down, then the stock may gap down. Okay, these are the companies that ideally you use options to trade them, or you trade them intraday, or you wait for stronger support to go in to trade. Like look at the earnings before that wasn't that consistent. Yeah, but because of the new drug, right, then it drives higher sales here. But the earnings has a big drop yesterday. Let me show you the LLY, which is a hot stock for quite a while. Like during this time, it went up so high, then disappoint, right? Before earnings, right? So this is also missed earnings, right? So the these are those stocks that I would not suggest that you keep overnight. You look at the chart, then you know. Biotech company is very sensitive to the results. Anytime somebody say they have a side effect, okay, can see the stock gap down. Okay, I actually share with our students, don't trade biotech, unless you see okay earnings announcement bad, you trade within the day when it has not gapped down, or you trade the technical chart, then it's fine. Right? So now you can see it already fall below the critical area, EMA 200. Okay, yeah. So if you want to look at more stocks, right, you can refer to the list that I shared during my Wednesday, right? So here I'm debriefing all the stocks here. Tesla. Okay, so a lot of people ask me about Tesla. Okay, so Tesla is a bit unique. So because of Elon Musk has been a strong supporter, right, of Donald Trump. Not sure why it's hanged for a while. Excuse me for that. Okay, so it gap up and seems to still have momentum to go up. Okay. All right. So I think I have too many things open, so it take a while for me to refresh. All right. So you can see here for Tesla, right? It stay above here. So one thing about this is intraday chart on the right. On the left is the daily chart. It actually broke all-time high here. If you look at the 1 year, 280 is the all-time high. Just from my personal perspective, like high chance it can stay above the 280 level, because it's proven after that it stays as a support and it continue to go up. But this is as a stretch level. I think if you want to buy here as an intraday trader breakout, it's fine. Or trading a range here. Right. So those of you who have attended our intraday trading, right, you can trade the range here, right? Just this range itself, not a lot actually, just $5. Yeah? So not the best trade, I would say, or the breakout. But fundamentally, is Tesla a good company? What do you think? So Tesla is a bit tricky. Yeah. First of all, you look at where are the main source revenue. Almost 80% is from EV cars, right? For now it's EV cars, and the valuation is pretty high. Yeah. Look at the sales. Sales are doing well, but slowing down. The growth is slowing down. Earnings, they're making more money. At least they are profitable, right? But the margin is shrinking. I don't have time to cover a lot here, but the profit margin is actually quite thin. Yeah. And there's a lot of competition in this space. And, you are also paying a premium for it. Okay. So that is not like, to me, that's not a great deal. Okay. So this is more speculative, where it's because he's in favor. So he may be able to, one thing that I hope is he can change Donald Trump's mind about clean energy, right? Which is quite high chance, because Donald Trump is not into clean energy. So if he's able to influence Donald Trump to deregulate in terms of the approval for robotaxi or the EV charging station, he can get it deployed faster, less regulation in terms of approving vehicles for autonomous driving, right? That can benefit the autonomous drive in the US. And now with Donald Trump implementing the import, right, for overseas car, like from China, which is very competitive, at least in US, I think Tesla will do well, right, in the US for EV. But then worried that China may retaliate. Okay, yeah, so they may they may tax on Tesla car again. Right, so that's still a risk you need to manage. But the good thing is, Elon Musk is already planning to diversify, right? So on the robotaxi in the US is one area. The other one is I want to show you this. He want to move towards robotics. Okay, so if this one take off, then of course a China company may come in and compete as well. But the good news is he's already working on this. Humanoid robot, right, is the next thing. How many of you wish to have one of these? Yes, to help you clean your floor, clear all your mess. Yeah, I like to have one. Yeah. So he's working on this part, and the commercial edition may come out in the 2026. Okay. So how fast you can make it affordable is hard to say. I think he was talking about there was a price range here. I saw somewhere, if I'm not mistaken, is in a range of 20 to 30,000 US dollar for one, right? So you can think about whether you want one. Okay. Yeah. So this is called Optimus. Right? So this is another revenue stream if it takes off, right? So so fundamentally, this is how you need to evaluate on a Tesla, knowing that EV, they have an advantage in US, but disadvantage in China. Okay, charging station wise, they may be able to deploy faster in the US. Less regulation likely to happen, and if you can convince convince Trump to also sponsor more or have more incentive for clean energy, that will be benefiting him as well. Like, so that's the perspective, right? That's not like all in good news as well. But I think the better news would be they have a new revenue stream, right? So new product, new sales, rather than just 80% on the EV, which we know is going to be very tough market. And also if the robot taxi take off, right, that's another revenue stream for them. Okay, so for the meantime, I mean, this is my perspective. This support is more likely to hold, right, based on all the good news. But you need to have a stop loss, right? Anything can happen in the market. Okay, so you can trade it like a trend trading for the meantime. But for investor, I would say that you can wait for normally for investor, you collect all the strong companies you want to buy. You wait for bad news, okay? For it to come back to the stronger support. Example, right? Meta was not in favor. I shared Meta, although Meta is not in this. I shared Meta during the Wednesday. Yeah, as I mentioned, Meta not in favor by Donald Trump, but it's a great company, right? So you look at the bad news, right? It's rested on a strong support, right? Then you buy. Okay, then you have an advantage, because if you look at Meta, the fundamentals are so much stronger. Right? So you had to ask yourself, do you want to trade Trump stock or do you want to trade strong fundamental stocks, right? So this is look at the sales, right? Sales going up, EPS going up, is still very, very profitable here. You see, ROE, ROA, all very good. EPS next 5 years growth 20%, even though it's a mature company. Okay, it's already existed for very long. Valuation is still reasonable. It's very hard to find a stock that's still reasonable at this point. And more importantly, you look at the forward-looking statement in their earnings, right, where they're able to benefit from AI investment. Not many companies can recover the investment that fast. But what you need to watch out is they didn't put the figure yet as how much they will add on the investment. That's why there was a pullback after the earnings. Right, so Meta mentioned that they will continue to add investment on the infrastructure for AI, which is very, very costly. Okay, they already bought so many NVIDIA server. So if the numbers end up very high and they didn't trim their costs elsewhere, or the revenue doesn't come up fast enough, then the stock may pull back. But what I think is there's still some room because the valuation is not high. Right, so this is why the margin of safety is still there, given this kind of growth. For this kind of growth, not easy to find a stock with this PE, right? And the fundamental story is still there, right? The growth. Yeah. Initially, I worried that Facebook is saturated, but now they group their family of apps, right? And what apps advertisement is just starting off, and it's getting good traction in the US. So at least they have a lot more room to grow rather than just depending on the Facebook alone in the past. Okay, Facebook is a bit saturated. Even for me, I seldom use my Facebook already, other than answering our student. I'm going to student forum. Okay, so let me see if I have any other major things to cover. Okay, one thing is on the housing market that I touched on last Wednesday. This one is a bit tricky. Remember, if Kamala win, this is very straightforward, right? Those are, I call it a conviction trade, right? If Kamala win, strong conviction on housing, with the only risk left is how fast the Fed cut rates. But with Donald Trump winning, it's a bit tricky, right? Because even though he want to open up the land for, let me show you this. Like, this is the last one. Let me find the, yeah, okay. Yeah, so I want to just do a quick update on this latest one. I can see it's a very significant win, Donald Trump, 295 versus 226. very rare to get such a significant vote. But what is more important, for those of you who are not familiar with the US politics, right? These are called the swing state, right? The deciding state, because swing state means they are not clearly Republican or Democrat, and Donald Trump has a big majority. Have a win on this area very fast. What I want to show you is the Senate, right? So Donald Trump able to get 53 seats. That means he can implement a lot of his policy easily, right? As long as all his people support him. Sometimes some of his team may be a bipartisan. They are not biased to either side. And the next one is the Congress, right? He's almost getting the majority. So we need to watch this one as the next step. What do you think, right? This is easy or difficult to get? Okay. Yeah, 2-1-1. So they haven't reached the majority yet, so he cannot declare that, but the chances are high. But one thing you need to take note is every 2 years, right, they will change 1/3 of the members. Okay, so the next round, the Americans may want to vote back Democrats to balance it back, balance back the controlling power, right? But for now, it seems like Donald Trump is likely going to get the majority, so he can pass through all those deportation of illegal immigrants. His tax cut should be an easy implementation. I think the one that is harder to get through, probably if he want to just kill off Obamacare, like because that will impact a lot of people. Yeah, or the mass deportation will be a bit controversial. The mass deportation of the illegal immigrants, because it will affect the housing industry. Okay, so if he ever deport, like why I want to cover this is if he ever mass deportation of the illegal immigrants, then this sector will not be good, right? Lena, DHI, as well as XHB, right? The housing house builders will not be beneficial. But this companies, if he doesn't do that, right, he just implement new restriction. That means harder to get new approval to come in. Then this sector can recover if the Fed start to cut more rates next year, right? Because the valuation is low for the lender and people are just holding back from buying, right? The demand is still there. They just delay the demand and the housing starts are getting lower, right? So that means over time, it will be lesser supply. Now you have a higher inventory, right? Because people hold on. But overall, the demand versus supply in the longer term, mid to longer term, is still demand higher than supply, right? So this, and also because the valuation is not high, right? If you look at the valuation for Lena, right, it's actually pretty low, right? 11.35. But you don't compare this with tech stock, right? Yeah, you compare industry by industry PE, right? So the this area still, it's because of the valuation, it may not go down that much unless there's a mass deportation. If there's a mass deportation, then the construction industry or the farming industry will not have enough worker. Amazon will also be impacted, right? Some of the factories also will be impacted. And last time, Donald Trump implemented a restriction on H-1B visa. So even all those tech companies will be impacted as well. The wage cost may go up. So because there's an industry impact, Donald Trump may approach this more carefully. So the last round, even though he said he will deport, but he didn't. Right? So something for you to be aware of. All he did is to make the have more curbs to make sure that they deport those that has criminal case, right? So then they deport all those, and they have more strict screening for a new one that comes in. Okay, yeah. So one thing that I'd like to share with you on this is, let me see, there was one interesting, I may not have time to cover all the details, but let me show you. Okay, this is a very interesting comparison. Okay, look at the Trump time versus Biden, okay? Migrants numbers at the US-Mexico border. During Trump time, you can see very few immigrants, okay? During Biden, a lot, right? And these are the people, if they are legalized, they can vote in the next term. Okay? And that's why the Democrats like to have more immigrants to come in, so that in the future there will be a favor in terms of demography. And that's why Donald Trump wanted to deport them, okay, so that they cannot vote the next round. But if they have a mass deportation, it may affect certain industry, right? So I think moving forward, I think the tax cut very likely to get through pretty fast. This is the one that you need to monitor. And if there's any good news where he decided not to deport and just have a restriction, and also the Fed continue to cut rates, then this sector can recover. So for the meantime, I would say it's not a very straightforward trade, right? So unless at this area, as a long-term investor, you use covered call, right? Covered call is an option strategy. You buy stock, you sell option. Even though it goes sideways, you can collect income, right? Then you can still do it, but not this is not a straightforward trade. So I would say the more straightforward one, I leave the best for last, okay, is the tech stock, okay? Why? Because it's aligned with the mega trend, right? So the among the sector that I have mentioned, those are low profit sector. The tech stock are the more profitable, right? So you just look at couple tech stock, not just Nvidia. Nvidia is the one that's like ROE, super profitable. Next 5 years growth 35%. Sales is getting up very high, and there's a AI demand, and they're leading. Okay, so you still need to make sure that you know how to time it. As I mentioned last week, there's one thing I wanted to share here on the one very important slides that I want to share. Just hold on Nvidia before I wrap up, right? So this is Nvidia, and I just want to show you one more, just to give you a few flavor on instead of getting very excited on all the Trump trades, right? I think now it's time to look at the longer term upside, right? Go for strong, profitable companies like this Microsoft 35.6. Remember, this is not a recommendation to buy. I'd like you to do your due diligence, right? I'm just sharing my perspective, and this is just my style. Everyone can have different style. Some people like speculative, okay? I'm more a fundamental person. I time with technical, right? So ROE is very high. Just that you need to know the valuation is a bit on the high side, and they haven't recovered back a lot of the spending on AI, right? There's something you need to know about Microsoft. That's why it's not very bullish. It's still somewhere here, okay? The moment they have more sales on their the Copilot and so on, and any news on the recovery of the PC market, which is still important to them, because now PC market is also slowing down. We expect that by probably second half of this year, second half of next year, there will be a lot of upgrades of the PC, okay, or phone, PC and phone, because it's already 5 years after pandemic, right? During the pandemic, a lot of people buy laptops, but they may not want to renew right now. So next year, there will be more AI PC that will give them a reason to, right, to upgrade because of higher features. And so Microsoft that time can have a comeback as well. Those industry like AMD is affected by last earnings actually came down because the PC and gaming is slow, right? So if this industry take off, then AMD can recover, Microsoft can recover. I like this sector because they're very profitable, and in the long run, people still need tech, right? So if you want to diversify, of course, you can have some of these stocks, right? Not just the you can have the strong company tech aligned with the mega trend, AI, fintech, cloud computing. Then you can make some finance stock. You can make some Bitcoin, right, into it, like IBIT. IBIT is a ETF. You can have some. Now Donald Trump say he want to stop the war. If you stop the war, then not so good for the what they call it, the defense stock. But he said he still want to have a budget, right, to protect US. So defense spending will still be there. But I don't like the defense stock. They are very, very volatile. So I like to positions for longer term. Okay, so I don't have to worry about what's happened today, tomorrow. Yeah, so I hope this helped, right? Although this is more for shorter term, you can still trade this like 1-2 weeks or so. But if you want to keep it longer, I would suggest that you go for strong fundamentals, like what I mentioned earlier. Like in this year, probably you can look at the crypto side and also the finance side as a more conviction, right? Make sure that you do your due diligence. And last but not least, let me come back to the slide here. Okay, so I'm supposed to show you one NVIDIA slides. Just give me a minute. I should have opened that earlier. Apologize for that. Okay. Right, this is an NVIDIA investor presentation. A lot of people ask me, is there more upside to NVIDIA? What do you think? I want to show you one very important slide, okay, which is this one. The revenue for NVIDIA next year, right? Look at this, first half 2025, right? Revenue projection is almost the entire year of 2024. Is that good? Right, and this is revenue. Operating income for next year, first half only, is higher than this year entire year. Okay, so even though the valuation here for NVIDIA seems high, right, from standard PE, right? Yeah, forward PE is 36, right? When the P is high, it just means that the price you pay now, you're paying for the future NVIDIA growth. So it depends on whether the growth is going to happen, right? So this is where the understanding of the company and the industry comes in. Whether you think that NVIDIA is going to be able to achieve what they mention as the growth here. If you think that is, then it is still a potential upside. Okay, you just need to understand that what you pay right now, you're already paying for some of the growth in the future, right? As long as you're not paying for all the growth in the future. Okay, yeah. So that's what I want to say. And although we will have to be cautious on all the sanction will comes in for NVIDIA, for the cannot export to China, cannot export to Middle East, that will definitely comes in. But the technical chart shows that it has broken all-time high, right? For me, I still look at the technical chart. It tells you whether after all the news, what is people's position, right? Do they still want to trade this or not, right? So the sensitivity part is on any news on new sanctions, right? And with the manufacturing moving to the US, let's say for TSMC, it's going to increase the cost. But I think the upside, just my perspective, the upside revenue and the earnings for NVIDIA can cover some of this negativity. Okay, the higher costs, right, from charged by TSMC for manufacturing in the US, or maybe they cannot export so much to the Middle East and to China. Yeah, but they can still sell to the rest of the region. So it could be much more bullish if there's no such restriction. But with the restriction, I think because of the higher demand for the mega trend, NVIDIA will still do well. Okay, so that's just my perspective. This is not a buy-sell recommendation. You still need to know how to trade. All right, so I'm taking longer time than I expected because there's so much things to cover and there's so many stocks here. So last but not least, I want to share with you. To me, right, Brian, I just want to share with you two main things before we log off. One is our company, Beyond Insights, is going to have a mega trend symposium on 18th of January. To me, if you want to ride the big trend, this is a must-attend event. This is a one of a kind. There's a lot of all these AI conference, but they are not focusing on investor and trader. Right? This is a conference that we have done last year, January, but we are updating the content and we have a new team as well. Right? So as I mentioned, right, rather than being hung up with, oh, now you have this Trump, right? Then you have a FOMC, right? Those are noises that you should take advantage to enter the great companies, right? So if you understand the mega trend and you prepare what are the great companies that you can buy, all these noises or interim news that cause it to come down is the one that you can use to enter the trend. Or if you have gap up, then it helps you to understand, is there more room to go up? Like one example I gave you is NVIDIA, but there's a lot more opportunity in the whole ecosystem for AI. NVIDIA is just a small part of the whole ecosystem, although it's an important part. Okay, so if you're interested, like do scan here, right? We have also Mumu as the diamond sponsor here, right? Scan it using your phone and register for the event. It includes it's a chargeable event because we provide the food as well. Okay, and on top of that, I want to encourage you to open up a Mumu account because there's a lot of feature. Right? I'm just showing you part of the feature. One thing I like to show you in a short while is the live feed, right? There's a lot, they are very, very fast in live feed post earnings, like the trade that I mentioned to you. Because now it's already 3 days after that. If you see it on the Wednesday, there's a lot of the trades you can still take at that time. Okay, so if you see it on the Wednesday, for the intraday or the next 2 days trade, just that now it's already a post effect. But what I want to share today is the features and how to analyze. So if you sign up for this Mumu account using this code today, which is BI 2024, you have all these benefit, right? If you deposit 1,000, you get 100 cash reward. If you deposit 10,000, you get 0.5 of Apple share, right? Which is good money, right? Let's look at Apple. And if you deposit 30,000 ringgit, you get one whole Apple share. So is it a good investment? Right? I'm an investor. So let's look at ROI. So Apple share, 228, right? So 228 times the exchange rate, how much is that? Is it a good deal? 228 times, let's say 4.4. So you get 1,000 free money by putting in the 30,000 here, right? Or if you put 10,000, you still get 500. Okay, so that's like a 5% return, immediate return, zero risk, almost zero risk, except after you get the Apple share, it can come down slightly. In fact, I opened an account beginning of this year, and I got one full Apple share. The return was 10% to me. Yeah, by keeping the 8,000 ringgit for 1 month at that time. So I think it's a really good deal. Do take advantage of this. And so for these two, right, the symposium and this, if you are very new, you don't have a trading strategy, we are a believer of the systematic approach, right? One of the differentiator, and I'm a touchdown person, I go by macro first, what happened in the world, then we look at the industry, from there we look at the stocks. Right, so I adopt this big picture and I look at the stock chart. Yeah, we have a very systematic process. Today, I just cannot share too many things, right? I just do I have to share very fast because there's limited time. And on top of that, we have a strict money management as well, right? So if you're interested in that, you can go to our website, beyondinsights.net. Yeah, if you click on this Beyond Insights Symposium, yeah, within that, you can still have a link to go to our company website. Okay, so right now, don't have time for Q&A, but you can still post your questions. Yeah, if there's still a lot of questions and we see that you are interested to have future sessions, then we may organize another one, right, if there's enough interest. So I hope that you still benefit from this so far. Right, I hope to see you in our symposium. On a weekly basis, we have a sharing a 3-hour free seminar. Right, go to our website and you can join our free seminar on our systematic approach to the financial market. Yeah, what I shared here today is more on the advanced course on the macro insights, the industry insights, and the company insights level. Okay, so yes, the symposium is a physical event. Right, so would you like to have sessions like this? Is it beneficial so far? If it's beneficial, do click on the like and share with more people. Right, it's a YouTube live as well, and it's also hosted in a Momo account, so you can still view it anytime. The last part here is I want to also show you the other features in Momo here. Right, other than the Moo, you can see there's a live here. Right, on this, after you click on Moo, there's a live also on your mobile. Yeah, so these are all the great features. You can see FOMC press conference, right? You can view here, right? And also NVIDIA earnings outcome, you can actually come back to here to watch it, right? You can see the earnings call, right? Super micro. Okay, one warning, don't buy super micro. Okay. Yeah, this is just an earnings conference call, but it's not a recommendation to buy because they have some irregularity on their accounting, right? So that's a red flag for buying the stock. Yeah, they who knows, they could be delisted. Okay, so there's a lot of good features here, and also there's some learning side here, right? Learning feed, and what I like so far is this feed is pretty fast, right? So they if there's a new team, then they will post some very nice graphic here as well. Okay, you just need to control not being too distracted. You need to be very selective on what sort of feed will be relevant to you and your trading style. Okay. All right, thank you very much, and do put in your comments here so we know in the future sessions, what are the other aspects that you want to learn. Yeah. So this is taking me 1.5 hours. Last week I take slightly more than 1 hour, right? So do look at the content because I also cover more detailed description that is hot from the oven before even the market open at that time. Okay. Yeah. So to wrap up. Do your due diligence, right? Make sure that you don't simply buy just because you get tips from a friend or you see any posting. Those are just for you to trigger. At least, you may overlook the stock if you don't see a posting like that. But make sure you know how to analyze it and don't jump in straight away. And be clear whether you're a long-term investor, mid-term trader, short-term swing trader, or intraday, right? It's all different. Each one of it has entry and exit rules. And to me, fundamental is important so that you can have a peace of mind keeping it overnight. Okay. So thank you very much, and look forward to see you again in the next round. Do visit our YouTube channel, Beyond Insights YouTube channel, where there's other sharing there as well. Okay. Bye-bye.